Hello, Business 630 Corporate Finance students. This is Professor Hassey. It is Friday, October 28th, 2022, and this is our Week 1 update video that I will produce every Friday to review key topics of the week and go over any assessments or coursework that you have to do on Sunday. All of our graded work is due every Sunday. Well, tonight we're going to talk a little bit about some of the infrastructure in Blackboard. I hope all of you are beginning to get familiar with our Blackboard. Some of you have not entered it yet, so I urge you to please review Blackboard, and you all have a graded assignment this week, a course discussion forum post telling us a little bit about yourself, and also selecting a company that you will track throughout our coursework. You'll be doing a credit analysis of that company. You will be doing a financial statement analysis of that company and some additional work. So please select a company. If you want to look at examples, please review the students who have already posted to the discussion forum some excellent posts about their background and also their company selection. So please do that. So let's take a look at our Blackboard as we stand ending up our first week of study. I began to discuss this on Monday in our very introduction video. Remember, there's 2 videos every week, a minimum of 2 videos every week in this online format. An introduction video that's posted every Monday, where I go over the week's material, topics, introduction to the key points and key strategic points of the week, and then an update video either on Friday or Saturday at the end of the week, where I review those topics, talk about any specifics about the assignments this week, and just get you set up for the following week. Remember, this is an 8-week course. We need to get up to speed and engaged rather quickly. And that's why it's very important this weekend for you to review your Blackboard. Again, key points: the course syllabus and calendar information file. It gives you our course schedule. It gives you our syllabuses in both PDF and Word doc format. Please review those syllabuses this week, please. There's our key dates of when certain work is being done and completed. Some university information, some tech support information. If you have problems with Blackboard or problems with your technology, there's some information there that will help you. Our student hours are every Thursday evening at 6 to 8 p.m. And there's the link. There's a little bio about yours truly, Professor Hassey. And at the same time, that doesn't mean you can't get a hold of me only on Thursday evenings. If you have an issue, you have a variety of ways of getting in touch with me and finding information. You can send me a text message to this text number right there. When you do send a text message, please state your name and class. I'm not Merlin the mind reader. I can't tell who's texting me if I don't know what class you're in and what's your name. Secondly, you can use the course discussion forum file folder, where every week I have a file set up to post questions. Or you can send me an email, or you can set up an appointment at any time at your convenience, as long as it fits into my schedule, through Zoom. So that's some key information for you. Please make sure you're up to date on all this information. We have, whenever a course announcement is set out, it automatically goes into the announcements file folder. There's our introduction video of this past Monday. We have a section on course materials where you can see a digital version of our textbook online in Blackboard. There it is right there. Pretty nice to have. There you go. Those are all the textbooks that I have, and you just pick that one and you're off and running. We also have a Zoom and YouTube links folder, where immediately I post the videos of the current week, and they will accumulate over the course of the semester or the session. These videos are also in the individual work week file that they're occurring in. We have library guides. If you need help with the library, you're going to be doing some research. Matter of fact, in another week or so with our first case study, you'll be doing some research. You'll need the library and its resources. There's the librarian who's associated with our course, and we'll talk more about these databases and your access to them a little bit later on in our course. Then we have our student discussion forums. This week you are working on a discussion where you give us a biography and tell us, select a company from the Fortune 500. I hope you all know as MBA students what the Fortune 500 is, and then give us a little example or why you selected that company, and also please indicate to me the beta of this company. The beta is one of our key topics this week in risk and return. I've added a new section to our student discussion forum, and that is individual interviews. I have, over the next 2 weeks, I've put a calendar here of dates and times when I would like to meet with every student for about 5 or 10 minutes, just to make sure on a one-to-one basis you're getting what you need from this course. You have any questions or concerns, and just an overall chat to get to know each other. So it begins this Monday or this Tuesday night at November 1st. As you can see, one student has already signed up for it. All you need to do is open up this file folder and create a forum and tell me which date and time fits your schedule. If none of these dates and times fit your schedule, contact me directly and we will get a time and date that fits your schedule. But this is a mandatory session. You'll be given a grade. You make an appointment like Miss Dugan here and show up and talk to me, you get 100. If you don't make an appointment, don't show up and talk to me, you get a 0. And that's 5% of your course grade. So this is important. It makes you, it's one of my ways I would like to get you engaged in this class quickly. Notice this goes over a couple of weeks. This coming Tuesday, November 1st, and then the following Tuesday, November 8th. Pick which date of those 2 dates and times fits your schedule, and we'll have a little chat. So make sure you do that in the next few days to set up that schedule with me. As you create a form and indicate your time, I will put it here so nobody selects the same time as another student, and we can all get together and chat about our course. And as I mentioned earlier, here is the student questions and comments forum where you can post any questions that you have of me. Remember, everything posted to the student discussion board is seen by all students. Some of you responded to some of the bios that some of your fellow students posted. That's a good thing. This is to get us interactive amongst each other so we know and have a feeling that we are in the classroom, but it is online. And then we get to our regular course week. Every week has been designated. There's the introduction video from Monday. Here's a list of our assignments this week. We're going to talk about chapter 6, and that's I'm going to be giving a PowerPoint. Here's the PowerPoint that I'll be referring to. And you have the discussion forum this week. And here's an article that I think would be worth your while to read this weekend. It's called Efficient Chaotic: What's the New Finance? Even though this is dated March 1993, this article fits a lot into what's going on today in the world of corporate finance. I'd like you to download and read that article as well this week. Down the road, you might be seeing some questions and discussions in a case study that are affected by this article. And also, it's just good to keep you informed about what's happening in the world of finance. This is a great video explaining beta, risk, and return. Here's some more beta and risk and reward introductions. I urge you to looked at these videos. Capital asset pricing model. Many of you already know about these, but this is a refresher. What is risk? What is return? These are all key concepts in key videos that you should review for this week. Every week of the course is set up, and I talked about this on Monday. Off we go to the races. This week, you need to concentrate on week number 1. Now remember, I can monitor student visits to Blackboard. And if I see some students not participating, trust me, that's going to affect your work in your case analysis and your papers. So please visit Blackboard. This is an online class. This is not coming to a class on campus or at a regional campus. You have the responsibility and the accountability to study the material to get prepared for our assignments. Going back to the course information, as you can see, our first case number 1 is going to be due November 13th. So you're going to get that next week. It's an APA format, and it's going to be a credit and risk analysis of the company you select this week. Our case number 2 is due Thanksgiving weekend. Sorry. And it's a spreadsheet format where you'll be doing a capital budget analysis entirely in a spreadsheet. For many of you who have taken Business 330 or other business finance courses, this should be a no-brainer. For others who it's been a while since you've taken a finance class, this is going to be a challenge, a spreadsheet format. Case number 3 is due on December 11th, the week before we finish up our class. That is a PowerPoint format where you'll be doing a presentation to me, not orally, but giving me a file of a presentation in PowerPoint format. And then finally, a course assessment paper, which you'll be getting the work in a couple of weeks. It's due the last Sunday of class, and APA and spreadsheet format combined. Those are the assessed material. Notice it's different methods of presentation: paper, spreadsheet, PowerPoint. Very important to learn different aspects of presenting, strategic thinking, and work throughout this class. Again, as we go forward and as you take a look at this material in the future, if you need help and guidance, it's up to you to contact me, come to the student hours on Thursday night, and get prepared. As part of your MBA study, it goes along the line of the variety of different disciplines, just like you did in your business studies in undergraduate level: marketing, management, finance, accounting, all methods, disciplines to help you understand business administration. Now at the MBA level, we go strategic. What are the strategic models? What are the strategic information you need? Because with an MBA degree, you will not only be doing the work, probably not even doing the work, you'll be looking at the work, interpreting the work, and making strategic and planning decisions. You'll be leading a group of people. You'll be presenting to board members, to customers, to clients, everything. It's very important to understand the state of corporate finance. And that's what one of the main parts of this class is, to understand what finance is. It's a pain in the neck, according to George Washington here. Corporate finance is important to management because the knowledge of capital budgeting, capital structure, working capital provides for effective decision-making if the corporation is to maximize profits and stay competitive for future success. In other words, taking the resources that are available to you through good credit, relationships with bankers, relationships with the equity markets, obtaining that capital and investing in assets that will provide efficient and maximizing profits and cash flow so you can continue to grow and stay competitive in your particular industry. That's what corporate finance is all about: maximizing value for your investors. Then you get to keep your job. There are 3 main strategies in corporate finance. The investment principle. Naturally, you want to earn a return over what it cost you. If I go out and borrow $1 million from a bank and they charge me 7% interest on that $1 million, I want to invest that $1 million that I receive in an asset or group of assets that's going to produce a return that's going to be greater than 7%. Chapter 6 is the definition of what return is. Well, return is your income, your profit divided into the asset cost. So if I make $100,000 on a $1 million investment in a year, my return is 10%. If my cost was 7%, then I have exceeded my hurdle rate or my cost of capital, and that's a pretty good investment. The bad thing about it, though, it only exceeded it by 3%. Is that maximizing value? We'll talk more about that later. The second type of corporate finance principle is the financing decision. How do we determine whether we borrow money or use equity investment? Do we find equity partners? Do we use venture capital? Do we go out and use the amount of money or borrow money from banking relationships? Do we go to the public markets and issue bonds or issue stock? All these are the financing decision, and a lot of that is related to the credit rating and the risk of our business. If we have high risk, if we have a bad credit rating, to put that into perspective, if you're a company and you have a FICO score of 500, you're going to have a tough time raising capital. That equates to like about a C or a B minus credit rating with Standard & Poor's. The lousier the credit, the more difficult it is to finance. And also vis-a-vis more difficult to raise equity. Who's going to want to give you money for stock if you have a lousy credit rating? The financing decision is huge. And then finally, the dividend decision. How do you distribute your return to your investors? Now, it's pretty obvious in debt financing, you pay the interest and you pay the principal over the allocated time. That's a no-brainer. But in equity, when do you pay dividends and when do you hold dividends and reinvest it back into the company? Do you have preferred stock where you have to pay a dividend? Or do you have common stock where you as a management team and board can determine when you pay a dividend? A huge decision. Many individuals, investors want liquidity, want a return. That means a dividend. The only way to get liquidity from a stock is you either get a dividend or you sell the stock. Well, if you sell the stock, that's it, you're out. So how about giving us a dividend every quarter, giving us some return on our investment? That's a big decision with corporations. One of the key things about Chapter 6 and risk and return is what is called the capital asset pricing model. Some of you may have heard of this before. It's a way of determining expected investor return in the market. And it's a formula. The capital asset pricing problem is what is the required return on stock of your investors? It's the risk-free interest rate, which is the 10-year United States Treasury yield, plus what is called the market return rate, which is called the market risk premium, times the beta or the risk of your stock. That's why I'm asking you to find the beta of your company this weekend. Down the road, we're going to be putting that beta of your company into this formula, the capital asset pricing model. And let's say you have Amazon. What do I expect to return in the next year on a Amazon stock based on current market factors? So let's say I have a market premium of 8.38%. That's the market return minus the risk-free rate, 8.38%. If I put that into this capital asset pricing model, and I'm Apple Computer, I take the risk-free rate, 1.62, times the market premium, 8.38, times the beta of Apple, 1.22. Do the arithmetic, and it comes out to 11.84%. If I want to attract investors and make my stock and business attractive, I need to propose in business plans, in return analysis, in financial statement pro formas, an 11.84% return on the money. If I don't do that, I'm going to have a very difficult time attracting investors and keeping investors. And that includes bank loans. The lower the capital asset pricing model required rate of return, the lower the cost, the more valuable your company. And that's why these days in high inflation, this is a challenge for many corporate finance managers. Inflation is increasing the value of return in the risk-free rate. Inflation is increasing the credit risk of companies. This adds to a higher expected return on stock. We're going to be spending a lot of time next week and this week and the following week on this very important way of determining the risk in the market. Also, we are also going to study cash flow and how that cash flow that we expect to generate from our business is in terms of what our cost of capital is. Our cost of capital, the hurdle rate, weighted average cost of capital, is a combination of the cost of debt and the cost of equity as a percent of the capital structure of the business. What percent of debt is our debt? What percent of our equity is equity? That tells us about the business risk. We take the market rates, market risk aversion. If we have high debt, high risk, a lot of markets going to stay away from us. They're not going to offer us investments, buy stock, lend us money. And what is the required profits and return that we're generating off these assets? Is it viable to attract capital investment? We'll be talking a lot about this in the next 2 weeks as well. If you notice back here, one of the key determinants of determining the value of a company is free cash flow. What's the definition of free cash flow? It's the cash that we have left over after we pay the bills and the short-term working capital needs of a company. It's not the net income. It's not the net cash flow. It's what's left over after we pay our bills. What's the free cash flow of the company? Many of you probably have heard of Warren Buffett. One of Warren Buffett's key investment tools is finding and determining the future free cash flow of a company. If he can determine that and get some good numbers about the future free cash flow, he'll invest in that company because as of today, they're cheap. They'll become more valuable if they're generating free cash flow into the future. A very important concept, weighted average cost of capital and free cash flow. Please note that in your reviews. Here's the weighted average cost of capital. What does it cost us as a percentage of our capital structure? Remember, what's the definition of capital structure? It's the balance sheet. Assets equals debt plus equity. Debt and equity is the capital structure of a business. How we finance the assets, what mix of debt and equity? What is it costing us to get that debt? Interest. What is it costing us to get the equity? Capital asset pricing model. Put all those together, we can determine the average cost of capital of a business. Bankers, investors, fund managers, competition, all watch this number in relationship to particular companies. It is huge. And then finally, this all adds up to determining the risk of the business in the market. And how do you determine your risk in the market? As you look at key market indicators. I like to look at 9 of them. I'm not saying that you all should memorize these and be aware of them, but I'm also saying if you want to be a good MBA graduate student, you need to know these and what they represent in the market. Here we have, as of October 21st, the top equity indicators in a market. Dow Jones Industrial Average, Standard & Poor's 500, and the NASDAQ. You should be familiar with what those represent. Notice, haven't done very good in 2021, have they? This has been a bad year for equity markets. As many of you probably who invest in Robinhood, Charles Schwab, look at your 401k or your 503b retirement funds, not a very good year. But it tells us what the markets are doing. It tells us what our company in relation to the markets are doing in relation to how our stock is doing. Equity markets, those top 3. Then the leading indicator of the debit or debt or credit markets. It's called the risk-free interest rate, the 10-year United States Treasury yield. If Monday morning I go to my bank at Wells Fargo and I bring $1,000 there, or they have them take $1,000 out of my checking account. Do I have $1,000 in my checking? Yeah, I do, barely. and I buy a bond, a 10-year United States Treasury bond for $1,000, that's what they go for. In the next year, I will get $42.13 a year in interest for 10 years, 4.2127%, $42.13. Wow. Then at the end of those 10 years, I'll get my $1,000 back. Now, many of you are probably saying, that's not too sexy of an investment. Yes, but it's the safest investment you can make. It's risk-free. No, the United States is not going to go broke. The United States will pay their bills. And even if they don't have enough cash flow at that particular time, the United States has the ability to print more money to pay their bills. That's an advantage that businesses do not have. If you don't have money on Monday and you owe your rent, you can't go to your HP computer and print out a couple $100 bills to pay your rent. If you do, next stop is San Quentin. But governments can do that. And that's why it's called the risk-free rate. But notice the rate compared to December 31st, 2021. It is more than doubled. Ladies and gentlemen, inflation. It's gone up. Ladies and gentlemen, the Federal Reserve has raised the interest rates over the last 6 months. What does that mean? The government has to pay more for borrowing, and also we as consumers and corporations, companies have to pay more for borrowing, because that 10-year United States Treasury yield is the benchmark for car loans, mortgages, bank lending of companies. As that rate goes up, so do the cost of debt. A very important interest rate to track. If anyone tried to buy a mortgage lately, 7% for a standard good credit mortgage these days, the highest it's been in 30 years. Our housing buying days might be over for a while. Inflation. The next two key economic indicators are crude oil and gold. There's a lot of commodities. Soybeans, wheat, corn, nickel, iron, whatever. These are the two most watched. Crude oil, naturally. Even though we are becoming sustainable, less than needed use of oil, the United States produces all the oil they need internally. But still, the companies or countries we do business with, Europe, Australia, South America, all depend on foreign oil. If that price goes up, costs go up. Harder to do business. Look at gold. Gold is what is called a hedge. Many people buy gold when they think the world is not doing very well. With interest rates rising, gold is not as an attractive investment. I can put my money into a treasury. I can put my money into a debt instrument and probably earn more in interest than I can with the appreciation of gold. But gold is an important commodity to watch because it's a hedge. As I have gotten older in my investments, I no longer own much stock. I own bonds and gold. It's safe, it's conservative. But remember, I'm an old gangster. And then the following three indicators, currency. You know, the United States dollar is the highest it's been in over 25 years. Here's the relationship of the United States dollar to the euro, to the Chinese yuan, and the Japanese yen. Dollar is way up from December with the euro. Dollar is unusually way up with China and way up with the yen. The dollar is strong, but that can have negative aspects. It means that United States products purchased overseas are going to be very expensive to buy them. Also, if you want to buy a Ford Motor Company vehicle in Britain, you're going to have to pay a lot of money for it. But also at the same time, if you're an American citizen and you're traveling in these countries, your dollar is going to be able to buy a lot more products and services that country produces because it's more valuable. Many of you travel and have families in other parts of the world, Canada, Mexico, South America, Europe. You'll know what I'm talking about. These 9 indicators If I'm an MBA student or a business student or an entrepreneur or would like to know what's going on in the world around me, I keep track of these 9 indicators and what they mean to me personally, in my business decision making, and in the world that I do business in. The Franklin $100 bill. Without cash, we can't function. If a company's not generating cash flow, they are a risky business. That's why every quarter when companies announce their financial results, first thing investors look for is, are they making a profit and are they generating cash flow? Hopefully more than what the company predicted. And we do business in the world. And who's our main competitor? China. Yes, we have competitors in Europe. Yes, we have competitors in Asia. Yes, we have other competitors in South America. China is our main competitor. Many people feel within the next few years, let's say 5 or 10, China is going to outpace us as the world's largest economy. To me, that's not that big of a deal. But when you take a look at the social and the political ramifications of that, then it becomes a big deal. And we'll talk more about that. Corporate finance is not only how you're managing your business, how you're managing your credit, how you're managing your cash flows and profits. It's also how you're managing your business in the international, political, and social aspects of your markets. That is huge. We'll be talking about that at great length throughout this course. But can't forget our other partners, European partners. And they're struggling now. Great Britain, as you all know, going through many changes. It's a tough time in the world markets. Cash is not there. Credit are low. Interest rates are high. This is a great time to study corporate finance and strategic strategy with corporate finance. It's a great time to look at that, especially if many of you, and if you said it in some of your bios, are thinking about having a business, a side business. Well, how are you going to be competitive when your dollar is being stretched and your ability to generate capital is stretched due to credit, due to the markets? This is an important thing that we'll study. So there we are, the first week, talking about risk, looking at return, understanding what risk is, how it influences key financial indicators, how they influence our business strategic decisions. This sets the stage for our future work going forward into the next week, where we look at the time value of money. We look at debt investing, bonds, public market investing of debt, the risk-free interest rate and how it plays in all this. We're going to be developing a strategy and a way of looking at the world around us and how it influences our strategic decisions. So as we go forward, I urge you to look at the videos, study the material. As I said, remember the textbook is optional in this class. All the material you need is in Blackboard. Read that article about the chaotic nature of finance. A great article to get up to date on what's happening in the world of corporate finance. If you do this, the case studies and the work in this class will be a lot easier. I stand by this weekend to answer any questions or concerns. Sign up for an interview with me over the next week. So I look forward to meeting with you all individually for a few minutes via Zoom, and we're off and running. I want to wish you a great weekend. Our next video will be on Monday, October 31st, Halloween. Wonder if I should have a Halloween theme. I don't think so. Complete your discussion forum, and we'll see you down the road. Thanks, everybody. Have a great weekend. Adios.